You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for everyone's favorite bi-weekly source for all things options related. Yep, I'm talking about the Option Block. My name is Mark Longo from theoptionsinsider.com. Hopefully you have a chance to kick the tires and light the fires over there on the brand spanking new theoptionsinsider.com. If you haven't, what are you waiting for? Head out there, have fun, enjoy yourself, listen to some shows, read some articles, get some headlines, all sorts of good stuff. We're adding new functionality. You see there's an accounts tab there now. It's not really live yet to do stuff, but we're thinking about doing some cool stuff where you guys can make an account and do some fun stuff. So we're still playing around with that if you're confused as to what that is. It's not really ready to roll yet, but it's up there. You can see it. And all sorts of new stuff coming your way in the near future. Speaking of the near future means we got some showing to do. And joining me to help you do just that, by the way, if I sound a little bit different, because I'm still down here in our Roman Southern studio here today. Hopefully you guys are able to join us live. I know Mixler was reporting a bit of an outage and some issues over here earlier in the day. So, again, if you guys can't get access to that, then don't blame us. It's not us. Blame the Mixler folks. Hopefully you guys can get at it right now. Let us know if you can't, or hit up Mixler at the old Mixler link and say, hey, you can't get the show. Get your acting gear. Either way, though, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, indeed, we do like to hear from you guys. And joining me on the program today, let's see who we got. Let's spin the wheel and see who we have here on the program. First off, joining us from, let's go to the Fidelity hot seat today. Let's see who we got in the Fidelity hot seat. Let's go there because we have a rare return appearance doing a double header here. The return of the last emperor, yet again, Mr. Konstantin Vrandopoulos from the Active Trader Strategy Desk. Konstantin, welcome back to What Do We Owe the Pleasure of a Repeat Appearance, sir?
Thank you so much, guys. Thank you for having me. I want to say that I would gladly be coming on every single time, but I do have to compete for the spot because there are a couple of guys on the strategy desk. It just so happens to be that obviously it's summertime and some folks are either on vacation or getting ready to go on vacation. So a repeat appearance. Last Thursday I was on. Now here we are Monday. Always glad to be here. It doesn't matter those guys can stay on vacation as far as I'm concerned.
You got to elbow that Trey out of the way so you can get into the hot seat there. So
right.
Say, hey, Trey, what's that over there? Oh, I snuck in. Oh, look out. And forget about the rest of them. They're just crazy people. But glad to have you on. Also joining us on the old program today, he holding down the St. Charles hot seat. Good old Uncle Mike Tusaw from St. Charles Wealth Advisors, a.k.a. stcharleswealth.com. Uncle Mike, welcome back to the show. How go things? Is it pretty much a torrential hurricane up there like it is down here, sir?
No, it's overcast and 65 here in the Chicago area, so it's a beautiful March day here, it feels like.
I've heard stories that it is not exactly, shall we say, summertime weather up there in the Chicagoland area. All right. All right. Well, let's get the crew assembled. Let's see. I'll see while we dive on into the odd block listeners, or they should say the trading block. I'll see if I can wrangle myself some option pit folks. Meanwhile, though, it's time to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. We've got ourselves a doozy, and by a doozy, I mean somewhat quiet one. I threw you for a loop there, didn't I? Actually, not terribly quiet, but compared, of course, to recent sessions, it's not exactly blowing the doors off, blowing the old skirts up. Coming into showtime here, we're seeing most of the major indices, with the exception of the NASDAQ. The NASDAQ may fall into that latter category, but the Dow and the S&P both kind of up slightly on the day, about 0.25%. So nothing to sneeze at, but certainly no 1.5%, 2% we've been seeing of late out there in the major indices. The NASDAQ, though, feeling a little bit of a lift, feeling a little bit of its own vigor, getting a little bit of its vitality back, up not quite 1%, but about 0.75%. So a lot of lift, a lot of love coming out there in NASDAQ land. We're seeing, Apple, of course, up about 0.75%. Amazon also up 0.75% today. So a lot of those names feeling the love. Let's go see how our old friend, the old TSLA, is holding up here. That's up 4.5%, 9, almost 10 handles, about 224, almost 225. So they're feeling some love out there as well. All of that obviously combining to lift the tech-heavy NASDAQ up into the stratosphere. Uber up a paltry 1.25%. No, Uber feeling the love out there as well. Lyft up 4.5%. So it's a good day for a lot of NASDAQ-centric names, hence the nice bump out there in NASDAQ land. And, of course, all this green on the screen usually means a little bit of red on the vol screens, but I guess we're getting a little bit of a weekend back, and there's still, as you said before, there are still some lingering bouts of uncertainty out there in the marketplace. And all of that we had people writing in on our show on Vol Views on Friday saying, hey, I think this VIX should be 20. So there certainly are people out there who feel that there is more upside to be found. And VIX Cash feeling a little bit of that upside today, getting back up to about 15.5, up about 1/4 of a handle or so. We've talked before about how it seems kind of locked around that 16 handle level. It broke through it this past end of last week, but it's still kind of staying roughly firm, roughly steady, and that's pretty much what we're seeing out here coming into showtime. Mr. Uncle Mike, sir, same question for you. What's catching your eye? What's going on? What is lighting up the tape in St. Charles Wealth in this fine March day, sir?
The fine March day, I love it. A couple of things. I think that we have a strong market overall. The fact that we're really close to all-time highs in the S&P. A lot of what's happening right now, I believe, is political, along with just a good old-fashioned pullback. I mean, the market doesn't go straight up constantly all the time. So I think we have that going on. But some of the key levels that I'm looking at right now, we have the all-time highs coming up on SPY or SPX for that matter. We're probably about 60 points away from the all-time high in the S&P, which could be there in one big day in the S&P. We also have the 3,000 mark in the S&P, which is a key number. So we have to always be mindful of that. And then after that is where we really don't have a lot of all-time highs, or we don't have anything as a point of resistance from a technical level. So we have that going on. Earnings are not terrible by any means, or they haven't been. So ultimately, what I think is holding the market up from going through to the higher levels would be the things that I mentioned, along with a lot of the macro risk that's involved with interest rates, along with Twitter accounts, as well as the deal with China. So I think that's what's happening, and that's what's lighting up my tape at this point. Very much a wait and see style of market. We're going to wait and see if we can get through what we just mentioned.
All right, Mr. Last Emperor, same question for you, sir. What is lighting up the Fidelity tape? What are the Fidelity masses? What are they slinging on this fine March day down by you there in Jacksonville, sir?
Yes, guys, seem like the IPO fever continues, as you rightly pointed out last Thursday. Fidelity customers are trading some of these IPOs that have been, pretty good performers out of the gate. So I'll cover those. But to paraphrase or quote, I guess, Mr. Art Cashin there from the New York Stock Exchange, a veteran, the director of floor operations for UBS, likes to call these types of days a waste of a car fare and a clean shirt, right? So kind of a malaise market. I definitely agree with the fact that, when you're looking at 5 to 10 day historical vol, and it's got a 4 handle on it, that we obviously haven't gone anywhere over the past six trading days. I was actually looking at the range on the S&P 500, and it looks like we, from close to close, we're basically within this 5-point range for a week plus. Now, in terms of the Fidelity clients, Beyond Meat continues to dominate the ranking system here. So that one is up, 12% today. Wow, what a name, what a mover. Currently, on my last check, was trading at around $170 a share, up 12%. Short interest, continues obviously to be pretty sizable in there. I usually judge it by the availability of shares, in a large broker dealer like Fidelity Investments, and right now the short borrow rate here on an annualized basis is around 95%. So continues to be obviously people are showing interest in shorting, and therefore those rates are pretty high. Right now, 1,334 buy orders on the equity side to about 1,100 sells. Even, I would say, on both sides of the equation. Chewy IPO'd last Friday. Out of the gate, was a pretty good performer, was up substantially today, relatively flat. So that is being traded by Fidelity clients. Definitely leaning towards the buy side, around 66% buys, 34% sells. The name that I'm sure that you guys are going to be discussing later is Tesla, based on the news that we got this morning. I'm not sure how a company can be up as much as it is on the deletion of a Twitter handle, but nevertheless, Fidelity clients are trading it, leaning a little bit to the sell side there. Stock is up 4.5%. But the one that's catching my eye, and you guys rightly pointed out that obviously NASDAQ is probably one of the better performers out of the indices today, is Facebook. Right now up 3.13%. And the level I was actually looking at was 185, and it's now a couple bucks above that level. Reason why that level was kind of interesting to me was it was the closing price, or pretty close to the closing price, before the last earnings announcement. And as you guys I'm sure remember, the stock gapped up pretty nicely, went all the way to around 198 and sold off from there. So a short-term break of a downtrend line actually occurred on the 13th. You had a little bit of follow through on the 14th, and I was kind of looking at that 185 level thinking, well, will there be supply? Because the stock did trade there for the better half of the month of May, but sliced right through it and currently above it. So what used to be resistance, I guess now should be thought of as a potential level of support. So we'll be on the lookout for that one. And Fidelity clients are trading it right now, leaning to the buy side. So 60% buys, 40% sells. That's about it, guys, for the top of the list here.
Yeah, it is crazy. I was looking at all this Tesla madness while you were talking. It does seem, I mean, we've seen, I guess, crazier things in Tesla land, but the notion that it's up, nearly 5% on the deletion of a Twitter account. This might be the first time we've seen a move like that in relation to the removing of a social media type account. But there's some other stuff going on, obviously, as well. But yeah, 10.5 handles now, over 225, come to 225 and about a half listeners coming into this part of the show. And it's coming into the show. Speaking of that, I think we got the meatball now. We've wrangled him from parts unknown. Mr. Meatball, sir, how go things in the land of the pit?
I'm good. Well, my day just got better because I realized, was that Domitian I was hearing discussing what's going on Fidelity
It
today?
was indeed. It was the last emperor himself, Mr. Konstantin.
Yeah. So, yeah, Domitian, I got to say, by the way, I'm going to start calling you a different Roman emperor every time you're on. But I was noticing that I was a little surprised I didn't hear Target on your list because they had some real problems yesterday. I don't know if you guys heard about this, but like their entire checkout system started to fail yesterday.
That's fascinating because for a lot of names, when they go down, they talk about, ostensible amount of money that they're losing, right? They try to back it into some metric. Oh, we're down for this many hours. But that was Target literally having sales walk out the door, right? Because they could not process sales. So that was a big deal. Yeah,
and yet, I was looking for that as a buying opportunity, except that, it opened down about $1.50 and now it's basically unched, or only down about 80 cents. And I thought that was an interesting one to jump at. But, yeah, it is a snoozer today. Our old friend Tubby was telling me that it is the slowest he's seen in a very long time. So it's not just you, me, and Domitian that are feeling that pain. It's the whole marketplace is slow.
Are you saying we've hit the summer doldrums now, sir?
Well, all I say is leading up to, last Thursday or what was it? Last Monday, we were talking about the crazy realized volatility the market was experiencing. And now it has come crashing down. There is no realized volatility to be found anywhere. There's some stocks moving around. The Facebook is moving. Tesla, well, deleted a Twitter handle, so it's got to rally. But so there's some little stocks moving around, but that is about it. I've seen very little VIX paper. I've seen very little ETF paper, very little index paper. And the paper I saw was put sellers. So when you're seeing a lot of put sellers, what is that? That's telling you they're not even looking for things to go up. They just think it's going to be boring.
They're harvesting the old risk premium. I don't know if you heard all the research, Mark, but harvesting the old risk premium, that's the rage these days. That's what all the cool kids are doing out there. They're harvesting a little bit of the old risk premium.
Keep on harvesting.
You mentioned a realized vol. That is indeed the subject of our question of the week this week. So get on over there to @options if you haven't done so already. This went live right before the show. We're asking you guys, let's play a little fun guessing game. Which of the following names has the highest 30-day realized, not implied, but realized volatility? No cheating. What does your gut tell you? We gave you 4 choices. The aforementioned Tesla, moving a little bit these days. Bitcoin, also moving a little bit these days, although if you listen to the Crypto Rundown, you know what the realized vol has been out there of late. WTI for the crude oil fans out there, or we'll throw in a little NASDAQ love with the Qs. You get a little bit of bleed over with Tesla and NASDAQ, I get it, but still, interesting stuff for right now. Interesting how the voting is shaping up. I won't spoil it for you yet. We'll see. We'll reveal that a little bit when we get a little bit later in the show into the mail block. Meanwhile, though, let's see what's lighting it up out here in all things active, the big names out here today. Let's break down what Konstantin gave us to his Fidelity top names. Let's see what's going on out there in the broad market. Let's do a top 10. Here we go. Let's start number 10 here from the bottom here. Snap doing about 80,000 contracts as of about right now, tied with Amazon, pretty much 9 and 10. Amazon also with 80,000 contracts on the tape. Number 8, Baba, 85,000. Number 7, the old Widowmaker, Netflix, 102,000 contracts on the tape. Number 6, the aforementioned Beyond Meat. Everyone's going beyond with some meat there. Number 6, 119,000. Number 5, Apple. Apple pushed way down the list. Apple, usually number 1, if not that number 2. Today, a mere number 5, 147,000 contracts. So much read a paper at the end of the day. What would the brokerage business have done for the last 5 years without Apple? What a driver of volume it has been. But that's a conversation for another day. Number 4, Disney, 150,000 contracts on the tape. Number 3, AMD. Now we're jumping up, 232,000 for AMD. Number 2, numero dos here, Tesla, 276,000. Number 1, still, we're rocking it out here today. Facebook, 381,000. So Facebook apparently able to overcome the deletion of a Twitter account to generate nearly 400,000 contracts. The most biased player on the tape today, let's see, 77% for Disney, actually. Calls, 77% of that 150,000 was calls for Disney. So that's interesting. The most biased flow. If we go beyond the top 10 to number 16, we have 92% for Rig. 56,000 of those calls or 56,000 total. 92% of that coming on the call side. That's a much smaller name, obviously. Moving on to the the indices. What's lighting up the indices out there? VIX coming into showtime, a little bit shy of 300,000. So a decent day, but not quite even half the ADV. ADV about 673,000 contracts. So it's gap back up there again. And then SPY, 846,000 contracts on the tape. ADV right around 3 million. The SPX, less than half a million on the tape, about 450,000. ADV a little bit north of a million, about 1.2 million. The Qs, 230,000 contracts on the tape. ADV about 1.2 million. And the Russell, aka IWM, doing about 78,000 contracts. So light day for the small caps today. 292,000 is their average out there. Let's go really quickly, since we were just talking about let's first talk about some earnings. There are still some earnings here on the cycle for this week. Not a ton. We've got Adobe after the bell. It looks like tomorrow. Oracle Adobe's after the bell tomorrow. Yes, Adobe, easy for me to say. Oracle on Wednesday. Barnes & Noble also on Wednesday. I think both of those are after the bell. Oracle definitely after the bell. Thursday, we got Kroger and Darden Restaurants, your old favorite there, Mr. Meatball. You got Yard House, Capitol Grill, Seasons 52, Olive Garden, Mr. Meatball's favorite, the Olive. That's where you get your I know that's where you go for your tasty, delicious meatballs. It is Olive Garden. Oh yeah. So you can get all of that in one name, Darden Restaurants, listeners, including one of my favorites, Yard House there. After the bell, good kind of fast casual bar chain there, and then Carmax on Friday for all of you out there interested in such man. Also, a bit of a reminder, bit of a notice there. You guys write a lot of calls out there. A lot of you write calls in SPY. Just a notice, SPY ex-div coming up on the 21st, I believe. So something to keep in mind for all of you out there. Don't get caught by surprise with this one. So put that on your calendar. SPY going ex-div soon. Something to pay attention to. As we keep on rolling, right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down some of the weirder, some of the wilder, some of the more interesting stuff going on the tape. Speaking of things that are interesting, we got to kick it off. We talked about the deletion of the Twitter account. Let's kick it off and see just what the heck is up out there in Tesla land. Let's do our regular check-in with Tesla downside and see if that is still dominating the tape. Remember, we talked about it recently. I think most recently was at your big live event last week there, Mr. Meatball, and the puts were leading the charge, 50 puts in June. Let's see if that is indeed the case. Yes. Looks like some more have opened since the last time we talked about these. There's almost 80,000 open on that strike now, 79,904. That is the top open position still in Tesla right now. Followed number 2, and 50 puts have their magnetism. We go all the way out to Jan for number 2, 63,000 of the Tesla Jan. 50 puts, number 3, the Jan par puts, 45,000 of those. Number 4, the Jan 10 puts, 39,000. Those are round out the top 5 the June par puts. So we got 2 June puts in the top 5 with 38,000 of the par puts, followed by the rest all Jan puts. Not really surprising there of the makeup, but still interesting to see that the puts still hold so much fascination as we move on into what is going on in today's activity that's catching our let's see. We love our live odd block reads. See what's coming on. It's like a little bit of live theater as we kind of analyze it along with you listening. Let's see what our Eye of Sauron has for us here first. Oh, it's everyone's favorite name. Yeah, you know I'm talking about ERF. This is Enerplus Corp. They are one of Canada's largest independent oil and gas producers. You know, Canada probably has something to do with natural resources, and that is indeed the case, or energy, and that is pretty much the case here. ERF trading today $9.19, up about 4.5%. So a good day for ERF. But this thing a year ago was trading about 15 and a half bucks. So it was quite a bit higher. It got as high over that course of that last year as about 18. Looks like it hit that around July of last year or so. Then it kind of slowly started coming off again, dropped down to 12 and a half again back in November. And of course, when everything else fell off around Christmas Eve, it hit at about 960 or so. Then it kind of vacillated around those levels back up to 11 again briefly back in May. Then sold off again very recently and pretty abruptly from about 11 and a half all the way down to where it is right now. A little bit actually shy of the 9 handle, 881. The low of the year is 877, which it hit very recently. So it just rebounded off its 52-week lows. Let's see what's lighting it up on the options tape today. Up. It's some puts, and pretty sizable puts, too, for a very light name. It was the Jan 7 puts, lighting it up 20,000 times for 90 cents, but not perhaps the way you think. You might think, hey, this thing's tumbling. Maybe someone's saying, look out below. But no, it's actually like it's the opposite. These puts were 90 cents at 105, and someone hitting that bid 20,000 times for 90 cents opening out there on the Philly. I guess they're deciding, you know what, we like it at it's $7 is well below the 52-week low. If we get it there, we don't mind it. Plus 90 cents. So effectively, and I should say by the way, these are this Jan. It's not Jan 2021. These are Jan 2020, and then taking 90 cents off that. So 610. I guess they feel that's not a bad level to pick up this name, and if not, they're getting 90 cents to go all the way out through through Jan expiration. Earnings are on the 9th of August coming up, so there's going to be a few cycles between now and then. Mr. Meatball, let's start here. What do you think about this one? Taking 90 cents off the table to draw a line in the sand, pretty far below the 52-week low, sir.
It's not a terrible way to approach things. I have seen much worse, and I don't think it's bad.
Yeah, I'm not grossly offended by this one. He's getting paid a hefty amount. He's giving himself a decent amount of time.
Room.
Yeah, but not a ton of time. So it's not like he's doing it out 2 years or anything. And he's got a lot he could do. And if he picks up the stock at 610, I've seen worse buys out there, unless this thing, of course, falls out of bed. So interesting stuff. Tell you what, we're gonna keep an eye on this one to see how it works out for our friend. We're gonna put down a little bit of a to be watched here on this one, and we'll come back to our friend in the Canadian resources in a few months to see how these puts are doing. But this one we've seen definitely far worse in terms of harvesting of the old risk premium here. I think we got a trend here, Mr. Meatball, because next up on the tape here, the next big sizable trade that came across our radar today was out here in CNQ. This is Canadian National Resources Limited. Are you picking up a trend here? This is another Canadian oil and gas exploration. This one is in Alberta, Calgary, Alberta. This one trading $26.80 today, up about a quarter, about 1%. This is the name that's kind of been all over the place. A year ago was trading about 31 and change, almost 32. Then it gapped up to around 37 or so, 37 and a half. That was in July of last year. So it's similar to the other name, kind of following a similar chart, spiking, peaking in last July, then kind of slowly coming off until it kind of hit its nadir back in Christmas Eve of 21.81. And it kind of bounced off then. It's kind of been higher ever since got up to 31 recently back in late April. And then it sold off again down to about where it is right now, right around the 26 to 27 level. So we're not quite at the 52-week low, but we're not quite at the highs either. So kind of a little bit off the 52-week low here for this name. And what did we see here? It looks like someone perhaps betting on a bit of a return of some upside here. What did I say? I said we're trading at 26.80 today, and we saw, looks like paper coming in 9,181 times for the June 28th. Looks like picking those bad boys up for 15 cents. That was the offer at the time. This was opening over there on the Amex. So 28 call loves in June. This one, it's kind of interesting. That means someone, obviously Mr. Meatball, needs, looks like a bit of a pop here on good old CNQ for this bad boy to come to fruition, because the clock is ticking. The clock is ticking on these boys. There's no earnings. Earnings not till the 1st of August, so earnings will not be enough to save him on this one. So we kind of like the last one. I'm going to go out on a limb and say, Mr. Meatball, this one is probably not your favorite. Pretty much weekly calls for 15 cents almost 10,000 times.
Yeah, no, anytime you need something to happen fast and far out of the money, either the person is a very smart investor or this is going to be a loser.
Yeah, there could be stock with this. Obviously, they could be looking to hedge something in the near future. I didn't see any legs of stock that went up with this. They could have stock already against it, obviously. So there could be other motivations to this.
There could be,
just on the options leg alone, can't exactly put it down as the savviest of trades. There's probabilities for a reason, listeners, and the probabilities are not in the favor of this trade.
No, they are not.
Let's see if we can keep the Canadian love going, Mr. Meatball. No, we're not going out to Canada anymore. We're going out to Monaco, though. How's that? You like Monaco, Mr. Meatball?
I do like Monaco.
All right, because we're going out to everyone's...
I'm a big fan. Who was, what's her face? Doris Day.
Grace Kelly, right? Wasn't it Grace Kelly?
Grace Kelly,
yeah,
yes,
she was
yes.
the princess out there.
I'm a big Grace Kelly fan, so I don't know. Who do you think likes Grace Kelly more, me or Karakawa over at Fidelity?
I think it's going to be you. I don't know if the last emperor, a huge Grace Kelly fan, but we'll let him speak for himself in a little bit here as we keep on rolling. Let's see. Oh, here we go. Yeah, this is a newcomer to the album. I like the name though. Scorpio Tankers. How you like that, Mr. Meatball? Out of Monaco. Out of Monaco. Scorpio Tankers out of Monaco. Trading today, $25.35. Sounds like a soap opera bad guy, so I like it. Scorpio Tankers. $25.35. You see that coming in the movie, you think, you know what? This is obviously a bad guy's company. I would not trust this. But in real life, apparently, you have to. $25.35 here. As I'm gonna get a sternly worded letter from Scorpio Tankers lawyers now. Let's see. Trading today. This one a year ago was trading right around $31, so a little bit higher, about 6 handles higher, and that was kind of pretty much their high. Right back in June of last year. Then they kind of sold off pretty hard in July, went down to about 21, then sold through that again, sold through the 20 handle down to 18 and a half. And then they end up hitting their 52-week low right around October, and they hit it multiple times. October, November, it's kind of a spiked up, back down. They kept threatening. They hit 1475 was their low that they threatened multiple times. Most recently it was back around, looks like around the Christmas Eve time frame, but also looks like they got low to that maybe in February as well. They were trading low 16s. Maybe they got down to that 14 level again. Then they slowly began rebounding, and then they gapped up again back in early April from about 19 all the way up to 27, almost 28 in early May. So a good month for them. They're now back around 25 and a half, so they gave up some of that upside again. So it's kind of been a topsy-turvy year here for everyone's favorite soap opera villain, Scorpio Tankers. Let's see what our Eye of Sauron picked up out here. Well, I guess I can't fault this guy. This is someone maybe who's tired of a little bit of that back and forth and deciding, you know what, I am going to draw a line in the sand in terms of hedging, not in terms of selling. Looks like someone's buying some puts out here. And these are longer term. These are Jan 2021 8 puts. So I said they're trading today 8. Oh, wow. They're trading 25.35. Someone deciding, Mr. Meatball, looks like to draw the line of protection at 8. So roughly a third of where it's trading right now. And they're paying 85 cents for that privilege. So they're stopping themselves out, listeners, at around a nice, healthy $7.15. And they did that 4,000 times. This is an opening over there on our friends, the MIAX there. The market was 50 cents at a buck when they went up for 85 cents. So it looks pretty clearly like if someone found an 85-cent bid to hit, more power to them. I do not think that was the case. Clearly, between now and Jan 2021, there's going to be more than a few earnings cycles out there. So I won't bother regaling you with that. Mr. Meatball, very, very long-term puts and doing it for a level that is, I wouldn't say absurd, but pretty darn low, let's say, I think is a technical term. What are your feelings on this one? Obviously, there could be reasons. They could have stock shares there, something along those lines where they need to protect themselves at the 8 handle. But still, stocks at 25.5 roughly right now. They're stopping themselves out at 7.15, and they're paying 85 cents to do that. Are you loving this one, sir?
You know, I'd be interested to see whether there's some corporate debt involved with this or something like that. Because did I lose you?
We just lost you. Are you back there?
Yeah, I lost. Yeah, I'm back. I'd be interested to see if there's some sort of corporate debt involved here, because that's what this trade kind of feels like, is that it's some sort of debt holder hedge, which would make the most sense. The alternative is it's somebody that has a very low cost basis, and they want to make sure that they don't lose their stock. I mean, it can happen.
You know what it really is. You
lose money on their stock.
You missed the obvious exclamation here. The good guy from the soap opera is going to go take out Scorpio, and before he does that, he wanted to pick up a few puts. And so now he knows once he takes out the namesake, the company's in the toilet, and so he's going to make some money. See, you missed the obvious one.
I wish they'd have gone Serpico instead of Scorpio.
that might be a little more trademarked. I think you can get away with Scorpio these days. That's pretty public domain. Serpico, I don't know if that one's passed into the realm of public domain yet or not, but that would be a cool one too.
Right.
I would trade either a Scorpio or a Serpico tankers. Both of them intriguing. As we keep on rolling, speaking of intriguing, let's see what the last Emperor has in store for us today with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the block of strategy. Hopefully you guys out there listening live are not having any problems there. Let us know if the Mixler is holding. Seems to be working, but you never know. It's clearly having a big outage today, so if you're having issues, hit them up and say, hey, get yourselves in order. We want to hear the option block and later on the advisor's option. Maybe even some crypto rundown today. I got a lot of showing to do from the Southern studio. But speaking of showing, right now we got the last Emperor going to regale us and show us about some fancy trade and strategy. Mr. Last Emperor, sir, a little birdly, your Praetorian Guard whispered in my ear before showtime, telling me you're thinking about a little bit of some back spreads. Is that the case, sir?
I do. Yeah, gentlemen, we're talking about, a very low implied and historical volatility environment. So this kind of came to mind. It's been a strategy that came up a few times from the clients that have been calling into the strategy desk, not just for me, but for some of my colleagues as well. So back spreads, that's what we're discussing today, also known as ratio volatility spreads. And you could do those, obviously, with both calls and puts. Let's kind of level set here, ladies and gentlemen. Everyone understands that they're calls and puts, and you can buy them and sell them, right? So this is just a combination of basically one side of the other. You would be trading either the calls or the put side of the equation. From my understanding and from the hearsay that I've heard over the years, as the old Chicago option trader folklore goes, the reason why these things are called back spreads is generally because they are longer term trades, meaning that traders would normally focus on trading the back month in the options rather than the front month. I'm not sure if that's true. Guys from Chicago, you might know better.
I've asked this question myself. I've plumbed into the origins of like things like front spreads and back spreads, and I've heard about 50 different reasons, including for some guys who were down there in the primordial ooze days of the SIBO when these types of terms were coined. That one makes about as much sense as a number of the other ones I've heard, but at the end of the day, I don't think there really is a good reason for why they're called that. That's why I like to call them. I just call them ratios, quite frankly. And when I go the other way, I go reverse ratio. I think retail can pick that up because you start saying front and back, people are like, huh, what? It gets a little dense for some folks, I think. So yeah, but that explanation, I have heard that before. It probably makes the most sense from what I've heard. Mr. Meatball, do you concur with that?
Yeah, I mean, I don't know. I mean, I've heard, different explanations, none that really seem to fit. But, maybe because, I don't know, maybe because it was, I have no idea. Quite frankly, I never actually thought about it.
I have an idea, and I'll see at the end of the explanation if you guys concur with my thought process or not. But essentially, ladies and gentlemen, what we're dealing with is, a strategy where someone would be looking to profit from a substantial move, either bullish or bearish, depending on whether you're using calls or puts, in the price of the underlying that we're tracking, but also do that with limited risk. So the idea is that you would be selling one of the lower strikes if we're doing it with calls, so closer to the money strike calls, and buying two of the further out of the money. Now, to make it a little bit simpler for everyone, think about it as if you were doing a at the money bear call spread and then buying an additional out of the money call. Right, so that actually kind of strategically I found that helps customers generally think about the trade. With a put strategy, you obviously would be doing the opposite of that. So you'll be doing a bull put spread and then purchasing an additional further out of the money put. Now, you would generally, as a trader, aim probably to put it on for a small net credit or, as close to even as possible. And, in a risk versus reward potential, let's think that through. From the risk standpoint of view, you do have limited risk, just like you would have limited risk on a bear call spread or a bear put spread. Obviously, you want that move to be substantial. Why? Because you want the underlying to go through your long strikes in either direction, and the further and faster it goes, obviously the better it is. So technically speaking, in the call back spread, you would have unlimited profit potential up to that expiration date. On the put side, obviously, if the stock goes out, or the company goes out of business or stock goes to zero, but you are thinking about this strategy in a little more complex sense, because we have to be thinking about our Greeks here a little bit more than we normally would. So with a backspread strategy, you're generally going to be, if you're doing it for a small credit or for a tiny little debit, you're going to be positive vega. So you are looking for an extreme kind of volatility condition, meaning if your current view on the implied volatility in the underlying is low and you're expecting the market to move outside of whatever the options prices are currently pricing in, this is the type of trade that might be interesting, right? So you're a positive vega, meaning that if implied volatility explodes, it actually significantly helps you, because an increase in implied volatility generally increases the out of the money deltas by a lot more than it does the at the monies. You are generally speaking going to be negative theta in this type of trade. Now, remember that all of the Greeks are dynamic, of course. We're just speaking currently from the stance of you putting that trade on right now, right? So positive vega, negative theta, time decay is working against you. The good part about this is that obviously if you get the move wrong, meaning that it actually goes the other way. So if you're doing a callback spread and the underlying actually ends up going the other direction, meaning down, you put it on for a small credit, right, or a tiny little debit, and you basically, go out unscathed. The opposite is true, of course, if you're doing that with puts. Now, the risk in the trade is that the move, the directional move is going to be slow, and your maximum risk is reached at, if the underlying expires right at the long strike there on either side with calls or with puts. So we're looking for explosive moves, higher volatility, right? The market recognizing kind of the close to close differences, and hopefully the markets are starting to price in higher implied going forward, which technically is supposed to help you out with this type of a trade. And obviously with calls, you'll be positive delta. With puts, you'll be negative delta or short delta. So yeah, that kind of sums it up. I think for low volatility environments, these types of trades could make sense if you're, expecting an explosive move. I would also say that obviously everything that I just talked about, you could just flip it upside down, right? And you could say that if your belief on everything that I just said is the opposite, and you're willing to take the other side of that trade, that's what we would call, sort of that vertical ratio spread, right? Of doing the opposite. Instead of shorting one at the money and buying two out of the money, you would do the opposite of that trade. What do you guys think? Do you, in your careers, I would say, I have personally come across this with more advanced traders at Fidelity. Not a very common occurrence, but it does seem to come up, I guess, in financial media from time to time. So we get to talk about it.
Uncle Mike, I imagine you got to have a few clients doing a few. First off, Uncle Mike, can you solve the lingering question for us? What does the name come from? And then B, I put that on your shoulders today. And then B, I'm sure you have quite a few of your clients who like a good ratio over there.
In terms of where the name comes from, the only thing that I remember, one of my first jobs when I was passing the Series 7 back even before my Options Express days, I remember a woman in the office going through all these names of option trades, straddle, strangle, naked, spreads. She's like, a man had to have invented all these terms. So I'm going to go with it was a man that invented it, and that's about all I have on that one. So in terms of my experience with these and what we like to do with them, a lot of times like what was said, is that the back spread is something that you're looking for more of a bigger movement in the underlying. No matter what you do, whatever strategy you have, there's something good and there's a strength to the strategy and there's a weakness to the strategy. I'm a firm believer that there's no one strategy has more or less risk than another strategy. Now, obviously, if you have different contract sizes, 100 contracts is going to have more risk than one contract. But the risk itself isn't necessarily greater or lesser. It's just shifted in one way or another. And also better or fits more in I do is more along the lines of a front spread combined with owning the underlying. So in other words, let's say that a stock is at $45 a share, and we were to, let's say we owned 100 shares of it, we could sell 250 calls and then buy 145 call. And if that gets us an even money trade, what we've done is we've created double leverage from 45 to 50 with the stock with no additional risk, assuming you hold till expiration, of course. And of course, the disadvantage to doing that is that if the stock does go significantly above 50, you would not participate on it. So oftentimes in my world and in my client's world, a lot more times than not, we're doing the ratio front spreads, meaning we're selling more options than we're buying, but combined with actually owning the underlying. Back spreads, it's a phenomenal trade if you're looking to I often relate it to just doing a straddle but capping off one side, because if you look at a risk reward graph, that's what it does come out to, and that typically helps people to understand it from my experience. But oftentimes with what we do, it's usually along the lines of doing a front spread but while owning the underlying.
All right,
so guys,
go ahead.
To your point, really quickly, my thought was, maybe they're called back spreads, if they are in fact, right, because people are trading the back month because of the fact that we have the negative theta positive Vega dynamic. You're giving yourself more time for the price move to actually play out. At the same time, the longer dated options tend to decay a little bit slower. So that was kind of my thought process of well, generally affected less by that time decay if you're going out a little bit longer term, and you're still getting the volatility expansion as well as the obviously the direction from delta. But all hypothesis here, I guess, not fact or reality, unless we pinpoint the guy or gal who came up with the name.
Pretty much.
We went down this rabbit hole I'd say about a year ago, maybe a year and a half ago on the network, where we tried to determine some of the origins of these spreads. I remember even putting this to the Viceroy back a few years ago, and he was on the show because he was around for some of the early days of some of this stuff to see if he knew some of the origins. And front spreads and back spreads are one of the ones we always put out there because it's one of those ones that is just so seemingly impenetrable to a lot of people. And yeah, you're right. We heard a lot of different suggestions. One of those ones about the time aspect was one of the ones we've heard. I'm trying to remember what some of the other ones were now. I'm blanking on them off the top of my head. But we heard some pretty outlandish and esoteric suggestions for why they are called this. But the moral of the story is nobody knows. And the man who coined it, because I agree with you, Mr. Uncle Mike, it definitely was a man back in those early days on the SIBO. And he's probably long dead, and he's taken his secrets with him to the grave. So we're all left here picking up the pieces behind him with these ridiculous names as we keep on rolling. Let's do a real quick a bit of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This week, we're asking you guys some fun questions. We talked about realized vol at the top of the show, and our question of the week is a fun one this week. We thought we'd say, hey, like we talked about at the top of the show, which of these four names do you think has the highest? And we were very specific. We don't want implied. Actually, for some of the names like Bitcoin, it gets kind of hard to figure out the implied. But let's talk 30-day realized vol, the actual vol that it has exhibited in the marketplace over the past 30 days. Gave you four choices. Tesla. Talked about them a little bit today. Bitcoin. Haven't talked about them today, but maybe on a crypto rundown we'll get into some of that. It's been moving over 9,000 again, so Bitcoin has been rocking and rolling. Crude oil, WTI crude oil, or the Qs, a.k.a. the NASDAQ. Let's go back around the horn the other way. Let's start with Uncle Mike, sir. If you have a vote, sir, which one do you think has the highest 30-day realized vol?
I am going to go with let's do Tesla. It's hard to not pick that one. Tesla it is for me.
Tesla, interesting. Kind of hard to fault you given what's been going on out there, Mr. Meatball, sir. What's your pick out there?
What are my options again? I got Tesla,
Bitcoin, WTI, and the Qs.
Oh, I'm going to say WTI.
It has been moving of late, and there has been some actual volatility out there of late as well. An interesting choice. I cannot comment, obviously, yay or nay, because that would color our voting, and there still is time to go. Here, Mr. Emperor, you get the final choice is yours, sir. Tesla, Bitcoin, WTI, or the Qs?
Yeah, guys, I'm going to have to agree with Mark. I would imagine that it probably is WTI, given the fact that it had a 22% drawdown, peak to trough. I wouldn't be surprised if it was Tesla, but USO or WTI gets my vote.
Yeah, they're all names that have been moving of late. Tesla, from shy of 200 back over 200 again. WTI gapping up into the 60s and then back right down again through into the 50 handle again. So a lot going on there. And Bitcoin, of course, from 3,000 not too long ago all the way up to about 9,000, then selling off again back to 7,500, back up to 9,000 again and 9,000 plus. So that one certainly has been moving as well. So there's a lot of choices with a lot of vol. And I will leave it there, lest I color. I'll let those guys each. We actually had a nice little smattering of choices, which is pretty much almost in line with what we're seeing right now. We had one vote for Tesla, and two votes, I should say, for WTI. And coming in right now, you guys are liking yourselves some Tesla. 46% choosing Tesla, 35% choosing Bitcoin, only 19% going WTI, zero, not even a single vote for the Qs, which is interesting. But again, it just went live about a little bit before showtime, so we got the rest of the week. Get out there, make your voices heard. At Options on the old Twitter machine is the place to do just that. Meanwhile, it's time to keep on rolling into our final segment. It is time to roll Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what's on our radar, what we're keeping an eye on, what we're watching for the rest of this week. Let's start in the land of tasty, delicious Olive Garden meatballs. Mr.
You're
Meatball.
the worst. You are the worst.
You love yourselves a nice family outing Tuesday night. Bring in the Sebastian clan down there for some pizza, or I should say pasta and breadsticks and some meatballs. Don't tell me you don't do that.
Unlimited breadsticks. Unlimited. How can you go wrong?
Why would I ever go there when I can go to the Mariano's and buy a can of Chef Boyardee and have a better meal?
Unlimited breadsticks and salad.
I do like Capitol Grill that they own. That's not so terrible.
Yeah, there are some good names in there. So I'm getting the heated letter from Scorpio's lawyers, and you're getting the heated letter from Darden's restaurant's lawyers. So look forward to that, Mr. Meatball. But aside from slamming all things Darden restaurants, what is on your radar for the rest of the week?
The Fed. They have a meeting this week.
I have heard of this thing called the Fed. What is this Fed thing you speak of?
I know. So they've got a meeting this week, and a few earnings, but I think it's all Fed all the time. That's what I'm going to be keeping an eye on.
Mr. Uncle Mike, are you in that same camp, sir?
I am in a very similar camp. I'll be going to – I kind of want to go to Zaza's Italian restaurant in downtown St. Charles at this point. You got me hungry.
I like Zaza's. That place is good. No. I actually was out at Capri yesterday. That place is awesome. If you haven't been to Capri in Berwyn, Illinois, you are missing out, because that is the finest Italian food in the western suburbs.
There you go. If you're in the western suburbs of
Capri
Chicago.
People, I'm expecting a free meal.
Yes, I've been waiting for a free gyro from Skippy's Gyros and Lemonade for how many years now, and they continually deny my requests. How dare they? How dare they? But yes, it is a lot of Fed Watch. I'm looking at the Fed Watch tool here right now. And let's see, probabilities for a June 2019 meeting are at about 22.5%. I'll read this off in a second. Let's go off to the last Emperor Sir. What are you watching this week? Are you all Fed all the time too?
Well, first of all, I gather that none of you guys are going to be bidding for the never-ending pasta pass that they auction off every single year, right?
It's delicious. Delicious.
No thanks.
Getting me hungry.
All right. In terms, the Fed obviously, Wednesday is going to be all eyes on that, and kind of falls this Friday. We have Quadwitch as well, which I know at the beginning of the show you mentioned. Be on the lookout for that ex-dividend date on SPY. For those of you who are short SPY options, definitely should be looking out for that. Consider your options, where you are. If you're deep in the money, might want to call your broker and discuss what the better, what position you should be in, I guess, going into the ex-dividend date there. So I'll be watching the quad, which generally comes with a lot more volume. And obviously post the Fed announcement, I'm sure that probably will be a little bit more volatility than we've seen over the past 10 trading days here. So,
yeah, I'm looking at it right now. If you haven't ever played with it before, listeners, the CME Fed Watch tool is a great one to look at. It actually pulls real probabilities from what the market is actually pricing in, as opposed to what some analyst Fed watcher on CNBC is saying. Right now, looks like about a little more than 75%, 77.5% saying rates pretty much going to be the same, about a little less than 25%, 22.5% for cut. So all this talk for a cut, not exactly pricing in a huge probability, but a lot more than there was, let's say, a few months back. So that in and of itself might be kind of interesting. So pay attention to that throughout the rest of the week. Meanwhile, though, before we go, let me go back around the horn, see what everybody is working on that may intrigue you. Let's go back the opposite of the way we came. Let's go back to the Fidelity hot seat, Mr. Last Emperor, while you're busy elbowing out Trey and all those other guys over there to claim your place on the Fidelity hot seat / throne. if listeners want to reach out to you and the rest of the guys, and maybe they want to try out some of these Fidelity Options products, where should they go? What should they do, sir?
Very simple, fidelity.com/options. You can open an account, apply for options right from that page. Additional resources can be found at fidelity.com/coaching. That's kind of where me and my colleagues live most of the time. Also want to say that whatever it is that you have on your mind, whether it's back spreads or box spreads, as discussed last week, rather, give us a call. We're always glad to hear from you. If you're a Fidelity client already, just give your regular service group a call, request an appointment with the strategy desk. We'll gladly reach out to you within 24 to 48 hours.
Yeah, you guys at Fidelity, who knew you were so in tune with the hot spreads that the kids are talking about these days? I mean, who knew box spreads were a thing, right? And apparently they are. So maybe now we'll be flooded. Konstantin, by all sorts of people writing in with their ideas for where do you think front spread and back spread comes from? Hit us up. Let us know. Meanwhile, of course, head on over to fidelity.com/options. Kick the tires, light the fires, try out the tools, and give a call to Trey and Konstantin and everybody else over there on the Fidelity hot seat. And tell them you heard about them on the show. That'll certainly make their day. Speaking of making their day, if you call up Uncle Mike at stcharleswealth.com, that will make his day. Uncle Mike, if they call you up over there, in addition to delicious Skippy Zeros and lemonade, what else can they expect from you, sir?
Oh, by all means, they can expect honesty. They can expect 100% effort. They can expect a conversation on box spreads if they so desire. But feel free, if you're looking for a financial advisor who's not afraid to delve in the world of options, contact me. My website is stcharleswealth.com for more information, and that's how you can reach out to me.
stcharleswealth.com. Hit up the man about front spreads, back spreads, boxes, and anything else under the sun. And last but not least, you missed his big Pro Trader Summit. If you did miss that, you missed us. You missed Uncle Mike coming out of St. Charles, a very, very rare event indeed. You missed a delicious free steak, so you missed all that good stuff. But Mr. Meatball, if they want to look forward to some good stuff, maybe I think here's what you should do. Next time you have a webinar, you should raffle off a free Darden's Restaurants lifetime pass. What do you think?
Oh yeah, there's nothing like that. I'm sorry. I even joking about that is like insulting to me. It's just some things are just not appropriate, Mark.
Yes.
Don't take things you can't take back.
I have gone beyond the pale. I apologize.
Say bad things about his mama and his family, but don't call him a Darden restaurant, an Olive Garden attendant.
Correct. Now Mike gets it.
I have crossed the line.
So, yes, I would like you guys to go visit us at optionpit.com. And you're going to be a happy camper because you're going to learn tons of stuff. So go to optionpit.com and visit our blog.
All right, everybody, on behalf of the Last Emperor and the rest of the Fidelity crew who's off on vacation, having a good time. I'm technically on vacation too, but I'm still here talking to you guys. So there you go. Deal with that. Put that in your pipe and smoke it. And, of course, the Greasy Meatball, who loves himself a little bit of Chef Boyardee, and Uncle Mike, who likes all things, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing. Hopefully the live feed stayed up for you guys who are listening live, if not after the fact. You didn't notice anything because it all sounded like normal to you. And if you are listening live, we'll be back here in about, I think, half an hour or so to talk some advisors and options and otherwise to check it out on your feed. And we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.